What if I told you there is a sneaky tax that the government is charging you and you don't even know it? My next guest is an expert on precious metals, and he is going to show you how to protect yourself from the inflation tax by strategically leveraging precious metals. All this and more coming right now. Let's get into it. Hey, welcome to another episode of Making Billions. I'm your host, Ryan Miller, and today I have my dear friend, Kevin Demeritt. Kevin is the founder of Lear Capital, a physical delivery gold and silver company that specializes in helping people to profit from precious metals from both inside your IRA or physical delivery. Kevin's knowledge of economic cycles, financial trends, sovereign debt, and diversification strategies has helped to establish Lear Capital as one of the most highly respected and routinely endorsed precious metal companies in the country. So what this means is that Kevin understands how to profit from precious metal investing, and he's here to teach you all about it so that you too can enjoy your pursuit of making billions. So Kevin, welcome to the show, man.
Yeah, Ryan. Hey, I'm such a fan of the show and, so proud to be here. I've seen so many great guests that you've had and how educational it was. So love the program and, thrilled to be a guest on here.
Yeah, we've had wonderful guests just like yourself, and thank you for that. That's very kind. And we're here to talk about all things precious metals and everything that Lear Capital has done. This is such an exciting space, folks. So Kevin and I, we've known each other for a little bit here. Huge fan of everything that you've done. You've called straight from Los Angeles. So let's get into it. One of the first rules taught by the Oracle Omaha, one of the first rules of investing is don't lose money. And the second rule is refer to rule number one. So what is it in your industry? How do you not lose?
Yeah, Ryan, that's a great question. In my industry, I always say that, I couldn't be a stockbroker, right? There's too many unknowns there. What's the CEO doing? Do they have too much debt? What's the economy doing? There's too many variables there for me. So in precious metals, there's a correlation between the U.S. government debt and the above ground reserve of precious metals. And when you take above ground gold reserves and divide it by debt, you come up with a number, you times that number times 1.6, and you come up with a value for gold. Now, it sounds weird. It sounds like it's not complicated enough to be something that, financial gurus would do. However, the correlation from the gold price to debt is 91.2%. If you went to Vegas and you knew that when you rolled those dice every single time you had a 90% chance, you would do it every single time. So the easiest way not to lose in precious metals is to watch that ratio and buy when it's below the price that you calculated out at.
Man, that is phenomenal. And folks, so we've got ratios and metrics and all these things that we do in finance, and this is certainly one of them. But the thing that I really want to impress upon you, those who are listening in 100 countries around the world, I really want to impress upon you the importance of the commodities market, specifically in precious metals, but all things commodities. It really does help not only to give you a sense of leading indicators of economic activity, but also lagging indicators. In other words, what's going on in the commodities market, the metals market, can actually tell you what's about to happen in the economy a lot of the time. And so really, even if you're not a commodities guy or commodities girl or whatever it is that you're into, understanding this market is going to prove to be one of those elements that as you learn to understand that and listen to what Kevin has to say, this may also help you to learn in your own industry and get in front of a lot of trends. Would you say that's a fair summary?
Oh, absolutely. Any kind of commodity typically has this fixed supply, right? You can only pull so much gold out of the ground. And even with all the new technology trying to go deeper into the ground and big trucks to, pull it back out of the ground and move it around, they still can't get more than around a 2.5% increase in the reserve of gold, mining it each year, right? It just keeps going further and further down into the crust. So you put an increase in demand, meaning the money supply, on a fixed supply like real estate, precious metals, any kind of commodity, the price is going to go up. So this is a much easier investment to try to figure out from a supply and demand point of view than it would be, like I said, stocks and some other complicated things that people much smarter than I that you have on the program come and talk about.
Yeah, perfect. So we talked about, obviously, rule number one is don't lose money. And you've given us a very wonderful, easy to implement breakdown on this. I call it the debt to reserve ratio, but whatever we call it, that's a great way to say, look, this is how you find above the line, below the line, buy in or sell prices. That's how you don't lose as you follow the data. But there's also winning in this market, and you've done a whole heck of a lot of it since I believe you started Lear Capital in the 90s. So maybe you could bring us up to speed. Just talk to the beginners here. How do you win in precious metals?
Yeah. So the easiest way to win in precious metals is, first of all, plot that line. It's not difficult. You can receive information from Lear Capital. You can receive information from other people that talk about it. And here's the price of precious metals. Then it turns into a patience type of situation, right? It's either above the line or below the line. So the way to win is to purchase the gold when it's 30 to 40% below the line. You know, Charlie Munger, God bless his soul, unfortunately passed away, said that's your margin of safety. He always called, the margin of safety. We're buying below the actual intrinsic value of a stock. In this case, we're buying below the value of where the precious metal should be with a correlation of 91%. So you've got this incredible correlation. And if you watch the precious metal and you purchase it when it's at least 30 to 40% below that line, you're going to do very, very well. Today, we sit at 35% below that line. So we're in great shape for an increase.
Awesome. So we're in the buyer's market. And, a lot of the things, as you mentioned before, there's fixed supply and there's only so much. There's probably a lot of demand, especially for gold. What have you found to really influence supply and demand, basic economics on the precious metals market? What is driving demand for gold?
Today, Ryan, it is central banks. Central banks, more than anyone, understand this ratio because they're the ones printing the money. So when they print a whole bunch of money throughout history, usually the price of gold catches up with that supply of money, or more importantly, the debt, especially in the United States, which is where the best correlation comes from. So what are they doing right now? Well, last year they purchased record amounts of gold. They purchased, I have the number here, 1,136 metric tons of gold. Now, to put that into perspective, it's 1/4 of the entire mining supply for last year. This year, they're purchasing even more. When you go back in history and you look at the biggest increases in the price of the metal, central banks had something to do with it. Why? Because they're the biggest buyers. Hey, if all of us could go print money in our garage and go buy physical assets, we would do it also. Central banks are just limited on the types of assets that they can buy, so they typically do a pretty good job of buying gold when it's low and selling when it gets above that line. So one great indicator are central banks. The other advantage you have with central banks is that they're not day traders. They don't buy today and sell tomorrow. They purchase today, they hold for 5 years, 7 years, well, not even 5, 7 years, 10 years, 15 years at a time. They're not hedge funds. They're there to hold for the long term. So when they pull that gold out of the market, you just have less gold to purchase. So the money supply that's coming in to purchase from a recession or inflation or what have you will start to push the price of gold higher and higher. That's what we're seeing now. The price of gold's now bounced over 2,000, and I expect it to run over the next couple of years fairly steadily because of the buying from central banks, the institutions, and then the individual investors are usually last and come in and start driving the price even higher.
Awesome. So what Kevin's done is he's illustrated a lot of ways to figure out entry and exit points, and even swimming upstream and describing some of those drivers of those. And so paying attention, this is great for the beginners in this industry. So paying attention to what the central banks are doing and the growth or the contraction, capitulation of the money supply. We won't go into any of that, but you could certainly have fun on central banking and all the economics that come with that. So you can work on that as well. Now, I'm curious, let's round second base here. Let's talk about the gold market and really what's going on here. What are you seeing where it's at today?
Well, like I just said, the gold just broke $2,000 an ounce. Central banks are buying like crazy. And one of the things we want to look at, Ryan, is where do we believe the debt is going to go, right? So where we're at today, the price of gold should be around $2,700, $2,800. What we're looking at is in 2027, where does the government predict that the debt will be? And they predict around $45 trillion. We're at about 34, so around $45 trillion. I've never known them to be correct. I could not go back in history and find one time where the government actually projected the debt level and was accurate, and not on the downside where they predicted it too little, right? It's always been the debt is more than what they predicted. So at $45 trillion, the price of gold in 2027 should be at least $3,200. Right now, we're 35% under the line. By 2027, we'd be 60% under the line. So purchasing today gives you a pretty good run into the future. So if you believe that central banks are going to continue to print money, then gold's probably a pretty good place to be right now. If you don't believe they're going to print money, then don't buy real estate, don't buy anything that's a fixed asset because it's probably not going to work out. But Ryan, what I don't believe people understand is that it's impossible for the government not to print money. Absolutely impossible for the government not to print money. And a lot of people don't understand that. So I'd love to give an example here so that people can understand. So I had a college professor give me this example, and I've never forgotten it. We'll have a little play here. You and I both live on an island with a few other people. You're the banker, and we use shells as money. On that island, we have 10 shells as the entire money supply of that island. And somehow you as the banker, Ryan, have all 10 shells. And I'm an entrepreneur, and I come to you and I say, Ryan, I have this incredible idea. I need all 10 shells to make it work. And you say, that is a phenomenal idea. I'm going to lend you these 10 shells and at 10% interest. And I said, fantastic, great. I grab the 10 shells. I go out and I spend them in the market to build my business. And at the end of the year, my business does so well that I have all 10 shells back, and I come to you and I give you the 10 shells. And you said, that's fantastic. I'm going to put your business into default. I said, Ryan, why? The reason is I owe you that extra shell for the 10% interest. There isn't a 10th shell. You as the banker has to print that 10th shell so that I can pay you back. The problem is when you print that 10th shell or 11th shell, the other 10 become worth just a little less. So the government is stuck. With fractional banking, they have to print the money or we would all default on our loans. So that's why the price of gold is going to increase. And the more debt you have, the more interest you have to pay, the higher and faster the debt goes up, then the better off precious metals should be as an investment. So I hope people understand that because it gives you great certainty that the debt level is going to go up. And even if you make a mistake purchasing gold, at some point, the debt's going to catch up to where your gold price is. So it helps you out with your downside risk.
Man, you got to love that central banking. Now, that's a really hard job to do, but you're absolutely right in that is to say, yeah, I'll give you the 10, but you owe me 11. And you're like, well, there aren't 11. So it's once you're on that hamster wheel, you can't get off. And it's just money printing until you've completely diluted it. And so what we're talking about here, folks, is that how do you protect yourself against it? This is what Kevin's doing. He's trying to arm you with this. And so one of the alternatives is you step out of that madness because you got nothing to do with it, but it's still happening, whether you like it or not. This is how it is. And so it's really dealing with how things are, which is, well, you can own precious metals. So precious metals, as those 10 shells devalue as you print the 11th, also they do value gold. So the price of gold goes up as the price of dollars goes down, or the value of dollars goes down. Now, I'm curious because I'm hearing a lot of stuff right now about all the BRICS, right? Everybody's trying to dethrone the king dollar around the world, and all these countries are getting together and sharpening their pitchforks. I don't know if they're actually doing that, but they really want there's a bunch of countries around the world, a good handful of them, that are saying, hey, maybe we can offer an alternate currency to the reserve currency of the US dollar. What are you seeing out there? What's going on with the BRICS?
Yeah, that's a great question. And if we go back to the island example, it kind of ties right in. How would you create a currency that you just can't print, willy-nilly, but anytime you wanted to print? You back it by something so that as you print $1, you need to back it by something. Prior to 1974, that's where we were with the US dollar. Every time we printed some money, we had to back it by a little bit of gold, and that prohibited the money printing. So these BRICS countries, which is Brazil, Russia, China, South Africa, and India, the BRICS countries, want to come out with a new currency, potentially backed by gold, is what they say, to compete against the US dollar because they're just basically sick of the US dollar and the US weaponizing it for war and embargo, everything that we do to these other countries. Everybody's kind of sick of that. So if that happens, there's going to be a huge transfer from the US dollar to this other dollar that will be more stable because they can't print trillions of dollars every year unless they back it by a little bit of gold. So they had a meeting here a few months ago, and there was an incredibly interesting quote that I thought, I couldn't get it out of my mind, and I'll read it here. It says, and I quote, "The goal," and they're talking about the BRICS countries, "is to reduce our economic and political dependence on the US dollar. We want to create an international currency replacing the US dollar as a means of a unit of a transaction unit." That's their goal. Now, if it was Brazil, I wouldn't take that seriously. If it was Russia, maybe I wouldn't take it so seriously. But when you add up all of these countries, Ryan, it's 3.2 billion people representing 40% of the population of the entire world. You have to take that seriously. And I kind of look for tipping points. And people have been talking about how to dethrone the US dollar for 40, 50 years now. This is probably the closest I've ever seen where countries are getting together and bringing in more countries to try to do it with the backing of 40% of the population. You have to take it seriously.
Man. So, what's the U.S. to do? Now, personally, I believe, this is just an opinion, I think the U.S. would go to war before they ever let it slip. They would not willingly let that happen. I would say the greatest export the U.S. has is the U.S. dollar. Just an opinion here, folks. So I don't think they're going to let their greatest asset just to be like, yeah, okay, I guess it's been a good run. It's your turn now. This is not going to happen. So if that ever is threatened, I personally think this is not great. You're going to see some conflict here. But maybe. I don't know.
So there's been 7 world reserve currencies. On average, they've lasted 72 years. We're at the longer end of the dollar for that period of time. Each time the world reserve currency was changed, the country who had the world reserve currency had enormous amounts of inflation. And you're right, they didn't want to let it go. So they did everything in their power to hold on as long as humanly possible. But in the end, they created too much debt and people wanted to move to something that was more stable. That usually was the hinge that got broken that moved everybody away to something else. And my opinion is that if they back this BRICS dollar with gold, you would break the US dollar and people would move over there, and you would have the greatest wealth transfer that nations have ever seen in the history of the world. Why? Because we have $1.5 trillion deficit with most countries out there, right? If you add it all up, it's about $1.5 trillion deficit. If I had to trade in just gold, let's say that it's not backed a portion by gold, but the whole thing is gold. We're just trading in gold. That means that my deficit is your surplus. I am giving you a surplus of $1.5 trillion of gold each year, and I'm getting toys and cars and things that are depreciating back from you because I'm trading with you, and I'm getting these things that are depreciating, and I'm giving you this physical asset of gold. Wealth is leaving the United States. Now it leaves in paper dollars called U.S. Treasuries. Now it leaves in real value in the form of gold. So it would be incredibly devastating to the United States. You'd get a repatriation back of dollars that would absolutely take inflation and quadruple what we saw here recently.
Yeah, I love that. And, it's interesting because not only are we talking about where it's at and what's going on, but we're talking about where the gold is going. And you mentioned, about 32, the price right now it's around 2,000 an ounce. You're expecting 3,200 an ounce in a few years. So about a 60% pop to the upside. But there's more than gold, isn't there? There's also silver. Now, silver is something that you also understand about. And one of the things, shout out to Jim Rogers. So I got to spend some time with him, and we spoke at the same event. And Jim Rogers was showing me, it's funny, we're equal silver nerds, and we both showed each other our silver coin that we carry with it. And he made fun of mine because mine's not currency. It's like a decorative one. Still is pure silver. And his was actual currency. So he's like, mine's better than yours, right? He's giving me a hard time. It's the Wall Street way. And well, it was. So, but we had a good time. One of the things now, for those of you who know me, so I have a fund and we do a lot of things, and clean energy is one of those things that we're very interested in on the venture side of my fund. And so solar is a big thing. I wonder if you can speak about the proliferation of solar and silver. What's going on there? How is silver and solar, how are those things related? Maybe you can walk us through a little bit of what you're seeing right now and where you think it's going.
Yeah, great question. And to start off on silver, I'll just say that in my opinion, silver is one of the greatest double play investments as an alternative investment right now that you could possibly get your hands on. And the reason that I say that is the last time we had a recession, the price of silver was $47 an ounce. We're hovering right around $25 an ounce now. So if we had another recession, which I believe we will next year, then the price of silver can skyrocket from $25 to $47 where it's already been. Okay. But if nothing happens, if we get a soft landing and the economy just kind of plugs along, then what you brought up about silver is incredibly important because it's still back to supply and demand with precious metals. And the price of silver has been increasing because of solar. So in 2014, solar was eating up around 5% of all the silver. So we have a reserve of silver out there. It was eating up around 5%. The forecast in 2023 at the end of this year, and it's going to be extremely close, if not a little bit higher, is 14%. I think it's going to be closer to 15%. So now we've moved from 4% in 2014 to 14%. So in 9 years, the growth has just been going through the roof. Here's the thing I don't think people understand. Without silver, solar really doesn't work. You turn it into a paste, so it can't be recycled. So if you tore all of these solar units off the top of homes and tried to recycle it, you can't. It's in paste, and so it's just gone. It went to silver heaven. It's done. However, in 2015, they're estimating that the silver sector alone will exhaust between 80 to 85% of the global silver reserves. So silver demand from an investment standpoint is going to grow about 7%. If you take the rest of the demand from solar, the price of silver, when you hear these guys talking about $75 to $100 an ounce, that's incredibly realistic. And I remember when silver was $3.75 an ounce, and I said it was going to be $11, and people thought I was a complete nut. And when it hit 15, I wasn't such a nut anymore. There's just not enough silver to supply the solar market and some of the investment demand out there. Forget everything else that it does, because it helps water treatment plants and all sorts of other things. But the silver solar demand alone will push the silver price to astronomical levels over the next 15 to 20 years.
Phenomenal. So as solar is increasing, so is demand. And what we're hearing is by 2050, 80 to 85% of the available supply gone. Well, used up just by solar. So the cool thing, double play about solar, you keep me honest here, Kevin. The double play here is, one, it does help just appreciation. You can own silver and it's just to hold the asset. It's fine. But also, two, is because it is used in a lot of industrial applications. Sounds like solar's calling dibs on all the silver. There's also another bump to that. You mentioned before. So where's the price at? Where do you see it going?
Well, I think you're going to get to $47 to $49 an ounce again over the next couple of years on silver. If you believe there's going to be a recession, usually we would, with the amount of money that they printed from the last recession, you should be maybe in the 50s or even low 60s for the price of silver. But I would say you're going to get to $50 an ounce if we have, the run-of-the-mill recession probably pushes it up into the 50s, possibly low 60s.
Wow, phenomenal, folks. And what's the price at today, roughly?
Around $25, kind of hovering around $25.
So 100% return potentially, and it reminds me of all my friends in Bitcoin and crypto. Love you guys. In the crypto space, they're saying it's a fixed amount, and that's all there. Once it's all gobbled up, man, just watch it fly. People be climbing over each other for that. Kevin's literally telling you the same thing. He's saying, look, 85% of the supply is gone. People are going to be climbing over. It's going to be used, and people are going to be scrapping to get that not only as feedstock for their industrial processes, but also protecting against some of the debt.
Yeah, that's right. And look, you can't use Bitcoin for solar. Bitcoin's not getting used up. It's still available unless you forget your password to your thumb drive or something like that. But silver's getting used up. The gold is not getting used up. Silver's just disappearing. Like I said, it's going to silver heaven. You cannot get the silver. Silver would have to be $300 an ounce before you could actually recover it out of this paste. So it's not available in the market anymore, and you're just using enormous amounts of it. And nobody's going to convince me that the green, energy movement is going to disappear in the next couple of years, because otherwise we won't have a planet.
Yes, that's right. Man,
we'll have a planet. It's just not going to be livable.
It'll be a little dirty. Yeah. So, thank you for that. That was phenomenal. Now I'm wondering, look, man, as we round third base, this is a wealth of knowledge, and you're a busy guy. So we're very fortunate to have someone with your huge economic brain on our show. I wonder if you can leave behind, with all of your experience. I mean, you've been running Lear Capital for decades. You've just been up to your eyeballs in all the economics and really understanding a lot of the drivers in this market. I wonder if you can leave behind for our fans around the world, maybe 3 things that you find the most helpful for people who are really interested in this industry.
Yeah, it's just going back to, you really have to understand, look, gold's going to lead the market in most of the, with the metal. So with silver and gold, wherever gold's going, the silver price usually is going to follow that. So the first is find out where the price should be. If you're buying it over, don't buy it. Right? Wait for it to correct so that you're at least 30% below the line of where the metal should trade. It doesn't trade on that line all the time. It goes way above and it comes down below. So if you look at 2008 or 2010, when it was trading at 2000, it was above the line by almost 15%. You should have sold it and purchased platinum and palladium because they were industrial metals and they were depressed. We want to make sure we're buying at the right price. Number 2, when you purchase it, if it's 35% below today, I can't tell you if it won't go down to 18. So you can't just wake up in the morning and go, oh my gosh, it went down to 1800, so I'm going to sell now. No, buy a little bit more if you want to, but don't sell. You have to have some patience, hold on, and let it get back to that line. It will get there. It may take an extra year, but you just have to be patient. If you don't have patience and you're a day trader, don't do this, because it takes time for this metal to appreciate and get to the pricing that you get your reward, your pot of gold at the end of the rainbow.
Yeah, literally. All right. So I'm feeling lucky already. What else? Like what about, because I know you can own like an ETF like GLD, you can have gold coin, like you can own physical versus like, what advice can you give to people who are maybe not sure of owning physical versus an ETF on it? Like maybe walk us through some of that information.
Yeah, that's a great question, because I get it a lot, where people always ask, hey, why don't I just go buy GLD? So my response to this is you can. You're going to get about the same profitability with the increase in gold, because GLD or that exchange traded fund is just going to follow the price. However, if you called me up and said, hey, look, I'm really concerned about this economy, and I want to own some gold for safety, and I want to own it because I think it's going to go higher. Fantastic. So you say, I want to put in $10,000, let's say. And I say to you, Brian, fantastic. I'm going to take your 10,000. I'm going to go buy the gold with it. And then I'm going to ship it off to England, where GLD holds their gold at HSBC Bank. And that's where I'm going to put it. But I'm not going to put 100% in there. I'm going to put 90% or 95%, and then I'm going to have some hedging going on for the extra 5%. You'd look at me like I was completely out of my mind. But that's what's happening. So if you're just working off the price of gold, then great, you can go buy GLD. If you're working off a premise that, hey, look, if something really goes horrible in the economy, then I want that price appreciation, but I may want that physical possession. I may want to keep it in my safety deposit box. I might want to keep it in a safe somewhere. I might want to have a depository that is here in the United States that would deliver it to me on a moment's notice. So that security that you get, that's yours, and it's not going to be caught up in a bankruptcy or some crazy thing that a company would do. It's physically there. It's yours. Then buy the physical gold. That's the difference between the GLD and actually owning the metal yourself.
Man, and so, like I know you can log into Charles Schwab or whatever account, buy an ETF, but right? Most people understand that. But what about buying the physical, like actually buying how do you go about buying the physical asset?
Yeah. Well, you pick up the phone. With our company, the way we do it is we first want to make sure that everyone's educated. So you pick up the phone, give us a phone call. We send you out a full packet. We're going to show you on the line where the gold price is and where you're purchasing and the correlation and all that kind of good stuff. And then, you get to choose what kind of metals, or if you want some help, we'll help you out with that. Once you choose them, we lock in the price then and there before you ever send your money. Now, we do something very unique at our company that I don't think other people do. Well, I know other people don't do. I send you an invoice with everything that we discussed on the phone, and I give you 24 hours to cancel that invoice for any reason whatsoever. So we do that so that you can take it, compare it to anybody else out there with pricing or so on and so forth, make sure you feel very comfortable with what it is, and then send your money into us. So a lot of people just haven't done this, quite frankly, Ryan, and we just want them to be comfortable with the entire process. And then when it's time to sell, you just give us a phone call. We lock in the price before you send it to us. You use the Federal Express box that we sent to you. You put it back in Federal Express. We cover the insurance on it. You send it back to us. It's back in 2 days, and we just wire you back the money. So it's a little bit more complicated than GLD, but at least you have the physical metal.
Man, all right. So that, my friends, is how you play to win. He's running a business and he's kicking butt. I love it. So working with you guys or anyone similar to that, I didn't realize that. So they can work with you guys. What would be a third thing? A third leave behind that you would say would be most helpful for people who are looking at jumping into this industry?
Well, always start with something free. So, I was thinking about the program, and like I said, just a huge fan of your program. Love all the education. So I wanted to do something special. It's at the end of the year, so anyone who either goes to the URL, which is Lear Lear invest .com, so learinvest.com/billions. So learinvest.com/billions, or they can call us at 800-314-0723, 800-314-0723. We are going to automatically, instantly credit your account for $500, which people can use for shipping of the metals to whatever location that they have, or use it for their IRA fees if they wanted to transfer an IRA. And shipping out the metals might be $75 or $100. We don't eliminate the 500 minus the 78. We you still have that credit. So when it's gets ready to be shipped back, you just use the credit, and we'll continue to use that credit until it's all gone. So we want to do something special. That's what we did, and that's what I would say is start with something free. That's risk-free. And look, if you go to our website, Lear Capital, and you call, just make sure you mention making billions, and we'll still honor that. But if you could use the number or the URL, then we know you came from your program. We don't do this for everybody, so please use the 800 number or the URL.
So yeah, when you talk about the show, then at least they'll know. Thank you for that. Man, that is awesome. All right, Making Billions exclusive here. So just to summarize everything, folks, don't lose money. Find your entry point here and hold the line for a long time. The second thing that Kevin talked about was owning physical asset can be a great investment that helps you on multiple fronts. And finally, always start with something for free. So you can go to learinvest.com/billions or call the number that he gave, and you do these things, and you too will be well on your way in your pursuit of making billions.